Well, what a bloodbath it was out there today. There was some volatility in the markets, and I was supposed to be doing the UK stocks I'm buying August 2024 video, but that got scrapped at 9 a.m. after I saw the pre-market and I went, okay, we're going to talk about what's going on with the stock market crash at the moment. And wow, what a day. We've not seen one of those for a long time. We had circuit breakers in Japan getting hit. We had the Nasdaq entering a deeper correction. Stocks were falling all over the place. It was a bloodbath, and if only there was some hints that it would potentially be coming up. I don't know, maybe we've been calling it out for the last couple of months that it's been looking a little bit worrying out there, but hey, some of us built a cash pile up in the last couple of months, and for some of us it was a big shopping day. Some of us were out there buying massive, and certainly that's what I was doing at 9 a.m. today when the stock market opened up in pre-market. I'll talk about that as well in a little bit. Let's get stuck onto what's going on at the moment in this 2024 stock market crash. So what a day in the stock market. The Nasdaq was down 1,000 points, nearly 4%, and all the indexes were cratering massive. I mean, look at the VIX as well, by the way, up 56%. That's massive. But we're going to point out a lot of things today. We're going to talk about the crash. Is it going to get worse? Is it going to get better? What am I buying in the stock market? There's a lot of things we're going to cover today, so I do hope you enjoy it. Before we do, if you want to support the channel, make sure you join the Patreon. It's normally £5 a month, works out as £60 a year without Patreon fees on top. But right now we are doing the current summer sale, which is £45 a month. If you send me an email, JK Investing, I'll get you on there, you get access to the Discord, know what I'm buying, know what I'm selling in real time, and 2 exclusive videos a week. That deal runs out at midnight tonight. I am getting rid of it after tonight. A great time to get in with all this blood that's in the market. There's real opportunities out there in my opinion, and you can see how I'm capitalizing on the market just like how I did in 2022, and we had some absolutely amazing performers. I'll give you a quick sneak peek. This is the list of stocks that I bought today on the Patreon, and this was my second batch of buys, as you can see here. Very aggressive in the market. Anyway, let's get stuck onto today's video. So, the fear and greed. It is fearful out there. You know, as soon as we have this negativity that's in the market, the media loves it, it's all there. And I mean, I'm guilty of it. I'm joining a bit on the YouTube scene, but hey, if I didn't, you wouldn't have clicked on the video. But everyone's out there with all the fear. It's funny, isn't it? You know, you take all these little steps up in the bull market, and then as soon as the fear is out there, boom, it just falls so rapidly. That's what happened in like 2022. You know, gains were gone out so quickly. You know, when we look at the COVID dip, that was just, you know, the drops that were happening day after day. When the fear comes, it doesn't, you know, people think it's going to be just something like a little bit gradual, what they've seen in a bull market. It's not. As soon as the fear comes, guys, boom, the stock market drops so fast. And look at that. We are currently in extreme fear at the moment in the stock market. Why is this happening? Well, there is a lot of issues at the moment around the world. Within the UK, for example, the Israel situation just seems to be heating up all the time. But I mean, the big thing why we've seen the sudden flush in the market downwards is the US job data. The US job data really spooked Wall Street because it was such a big increase and it took everyone by surprise. Well, most people. And what I've always said to you guys, for me, is that I'm not worried about a recession in the stock market until the job data starts going wrong. And then we had the job data that's gone wrong, and that's when the whole of Wall Street's panicked as well. And I've always been pointing out to you guys, this is what I'm worried about. Now, we've seen it ticking up, but the big thing was on Friday. Seeing that job data really tick up was the worry of like, oh, that's a little bit worrying, because that recession fear starts kicking in. And the thing as well is like, it's not just the point of view like, oh, everyone gets concerned. When something like this happens, it not only does it spook everyone like, oh, there could be a recession, everyone starts already acting like they're in a recession. So sometimes you can even get forced into a recession when you're not really having a recession, because everybody goes, I'm going to pull back spending because there could be a recession. And because everyone already starts panicking because there could be a recession, sometimes that can force you into a recession, which is the worrying thing that you kind of have going on at the moment, where everyone's like already planning ahead. So sometimes we can end up in a recession like this because everyone fears the recession, and then we do go into one because everyone's kind of preparing for one. And the other thing that kind of came on top of this is that not only do we have the weak job data, obviously on the weekend, which we talked about, is the Fed. The Fed have well and truly messed up. You know, what we said would, you know, I've been calling this out on the YouTube channel for months. I said, I'm building no, not many other people have been out here telling you, people have been pointing to other things like, oh, no, the stock market's going to carry on doing really well. Oh, no, the stock market's not going to go down until the housing sector gets weak. I've been saying, it's the Fed, guys, you got to be watching. You got to be watching that unemployment data, which we got, which was really weak. And I said, you got to be watching the Fed, because what historically the Fed do is they keep the interest rates for too high, too long, and then eventually they only cut when they go, oh, bloody hell, we better start cutting these interest rates now because it's going a little bit wrong out there in the economy. And that's exactly where we're at right now. I still don't, I'm not going to repeat this because I've done 2 videos on it already, but I still don't know how they've seen all the weak data come in and then still kept the interest rates basically at the same sort of rates. And it's actually quite funny now because the markets are actually pricing in an emergency rate cut from the US Fed. I think it's like a 60% rate, emergency rate has now been priced in, but we'll see if that happens. I personally think they should do it as well, but we'll see what happens. But obviously September, there's more than likely going to be a rate cut now in September. That'll be a very big surprise if there isn't. But the problem is that's September, guys. You know, you're going to be, another 2 months into this situation by then, and then, you know, for that rate cut to start kicking in, it's going to be like October, November time. So, you know, realistically, you got the fear that there's a recession already here 4 months before any sort of rate cuts do start to kick in. It's definitely not good in the short term, guys. I think I've said it for the last few months. I'm not optimistic about the short term, and I'm still not optimistic about the short term in the markets at the moment. And the thing is like, it's not a surprise. I still don't know how the Fed haven't cut, because we saw Q1 earnings coming weak. Q2 earnings have come in weak. You know, all the consumer stocks have been, you know, hitting slowdowns. I mean, unless the Fed have been staring at AI going, everything's all right, look at AI and what's going on there. But under that, it's been very weak. So it's not a surprise to see it have a big slowdown. I mean, I look at the S&P 500 and I'm still worried about the S&P 500 because realistically, it's still 27 times earnings, and everyone goes, oh, it's the norm right now, until that's what they said in, I remember everyone said that in 2021, oh, it's the norm now, and then we had the major pullback. I'm still worried about the S&P because I could still see this coming way back into like at least the 23 range. The big thing that I always was thinking is what's going to happen to the small caps, because that's where I think the opportunity is, and I've been calling out the opportunity for like the last couple of months is the small caps. And what surprised me today is to see small caps like down quite a bit as well today. I thought, okay, are these going to be sensitive to potentially a recession, or are people going to go, actually the small caps are still a pretty good valuation, let's maybe not sell them off too much? But yeah, the market went, nope, we're selling also the small caps off because we're worried about the recession here, which is not good to see, because the small caps, when the market moves down, the small caps normally move down more than the market, and that is what happened. It did not break its kind of historic trend here. What did make me laugh, I don't talk about Bitcoin on the YouTube channel. I'm not a big fan of Bitcoin, but everyone says that I'm going to upset a few people here, but everyone's, you know, says, oh, the Bitcoin's separate to the stock market. But why is it Bitcoin always crashes when the stock market goes down? I thought it was separate. That gave me a little bit of a chuckle when I saw the Bitcoin share price. Don't know if you saw it, Warren Buffett actually sold half his stake in Apple. Bit of a surprise there. He did sell a bit off recently, kind of played it off like, yeah, you know, it's just tax purposes, and he's done the same again. And I think he said the same reason why again was tax purposes, and I was like, okay, Warren, you know, there's nothing well, to be fair, he can't say, oh yeah, I want to really reduce my position because it's overvalued. He can't really oh, I think the business is not as good as what it was. He can't really say that when he has such a big holding still. But yeah, I think there's a hidden message in there that I think he doesn't like Apple as much as what he used to like Apple, and I don't blame him. I think that's a good decision, and it's definitely a good time for Berkshire Hathaway, which I think has sat on like, it's something like 217 billion of cash right now. Yeah, it's not a bad cash pile at all. So we'll see what he does with it. Warren, please end up buying PayPal. That's all I'm going to say. But overall, yeah, a lot of pain out there. It's one of those days where you don't log on to your portfolio. But for me, yeah, realistically, I'm not really bothered. You know, I've been through many crashes now. 2018 crash, the 2020 crash, 2022 crash. You know, the worst crash that we've had since the 2008 crash. I'm a bit of a seasoned veteran in this game now, and crashes don't really bother me. I just look at them as opportunities to buy more shares. And realistically, I do all this talking. I only do it because of the YouTube channel. I'm not really bothered about what happens in the short term. I look at the long term, and I think there's some good opportunities out there. I definitely think there's good opportunities out there, and I'm buying. You know, I look at what's going on at the moment, and even though I've been negative on the market, and I think the stock market is deserving of a pullback. I don't think we're in a terrible place. I don't think we're in a bad place that as bad as where we were in that Great Recession, or World War II, or the inflationary bear market, or the Vietnam situation. I don't think we're anywhere as bad as those situations. I don't think the situation is good, but we're definitely not as bad as where we were then. And the stock market recovers 100% of the time. I said it in 2018, I said it in the COVID dip, I said it in the 2022 dip. The stock market recovers 100% of the time. And in 5 years' time, will this probably look at a very small dip on the chart that was a good buying opportunity? 100%. So even though I've been a little bit conservative on the cash pile because I have been concerned about the market, for a long-term investor, I just look at this today as an opportunity to go buy more shares, and that is exactly what I did. On the Patreon this morning, I post a bit. This is the most buys I've done for a long time in one day. I did the first set of buys. I came in with a second set of buys around about 9 a.m. as I saw the market really starting to tank, and I have been very active in the market. And you can see all the buys that I made on the Patreon or the Discord if you are on there. But yeah, I did go out and started deploying. I'm on the highest cash pile I've had since 2021. So I wanted to start deploying some of the cash on the dip, and there was a lot of stocks I bought. I know some of you guys probably want some individual stock talk, so we will go through some individual stock talk. Google, I would love to buy Google. I'll let you know I didn't buy Google. In fact, I've actually been selling it. I'll let you in a little bit of a secret on the YouTube side. I did actually sell some Google. I did sell like 5% of my Google, and that was on Friday, by the way. It wasn't today. I did sell some on Friday because I just looked at the stock that was up, and I think a bit more cash here. The stock has fallen down a little bit since then, and I redeployed that into some other stocks. I would love to buy more Google though, but yeah, I've got like $110 would be absolutely amazing. We'll see what happens. The King, I'm sure this has even moved since I started recording. Yeah, look at that. I knew it would have moved. There's big volatility out there, guys. But yeah, look at that, 10% movement in one day from DraftKings. This has been very volatile. A little bit annoying because this stock is actually down, I believe, year to date now, even though it's been on another fantastic year. It's kind of giving. I'm not buying DraftKings at the moment because I've got a good average. I've got a big position. If to buy DraftKings at the moment, I'd have to see it like $20, something like that, $21, $22, $23. I'm not personally chasing it, but anyone that wanted DraftKings that felt like they missed out, I think you may be getting a little bit of an opportunity there. So a little bit of a hint there. Hims and Hers, same again, I'm still up. I'm going to cry on my position that's only up 160% now. I'm absolutely devastated about that. But yeah, like I said, I'm not really buying Hims and Hers unless it's like $8, $9 because I don't really need to. I've already got a good position on a good average. But yeah, I think this one's having a drop because of some comments from the Eli Lilly CEO saying that there's going to be the shortage is over soon on the weight loss drug, but that's not really a big part of Hims and Hers business, and they never factored it into the guidance, so it's nothing really that serious to get worried about with Hims and Hers. But yet the stock has fallen quite a bit in the last couple of days, down 23%. I had a lot of people commenting, talking about Hims and Hers, and I don't know why. Well, I do know why. It's because the share price fell. A lot of people just panic when the share price drops and like, oh, what's happening with Hims and Hers? And it's like, it's just a normal day in the market sometimes, guys. You don't need to worry about it. As long as the financials are still going in the right direction, that's all you need to worry about. And, unfortunately, that's fear. I think sometimes some of the new investors that come watch the YouTube channel, and this is the first time going through it, and they panic when the share price goes down. And part of the game sometimes, guys, unfortunately. As long as the financials go in the right direction, the share price will eventually follow, and that's what has happened with Hims and Hers. So don't worry, it's just normal. Don't get caught up. Don't be in a position where it's going up and then all of a sudden you're really quiet, and then all of a sudden when something goes wrong, panic stations. And also, I wasn't going to talk about Hims and Hers because obviously they're bringing their earnings out in literally 2-3 hours by the time you guys see this video, and I'm saving myself to do it more than likely. Unless I do it on the Patreon, a Hims and Hers earnings review. So I'm kind of saving myself for that. So that's obviously another reason why I didn't talk about it. So Hims isn't really on the kind of buy list at all. But people probably well, instead of talking about what you're not doing, what are you doing? So obviously the big things is just to look at earnings. Look at what's brought out good earnings and then what's dropping after good earnings. That's what I'm personally looking at and that's what I did in 2022. I looked at stocks that were bringing out 9 out of 10, 10 out of 10 financials and keep buying them, and the ones that were bringing out the weaker financials is, don't prioritize them. And that's what I've been doing. So for example, like PayPal, in my opinion, they just came out the other week with a very good update, EPS big beat, revenue big beat, buying more share buybacks, 14 times forward earnings for a company that's doing these financials, I think is, such an attractive opportunity here. Still majorly considering making this my largest position in the stock market account, still thinking about it, we'll see. But, you look at this stock here and it had a big jump off earnings, and yet the stock is now, I think, was that the jump on earnings? Yeah, it must have been. So, you got the jump off earnings and now it's only up 2% since that time frame. And it's been a very good year for PayPal, and Alex Chris is doing a really good job. And once again, you got stock that's down this year, and it's like, well, is that an opportunity? I think that's maybe an opportunity. So that's what I'm personally looking at. Obviously, you've got a few more in this kind of space that are doing the same thing. So that's the hint of what I'm actually buying anyway. And then I'm just kind of like looking at opportunities out there that I think, okay, is that getting a little bit sold off? So I'm looking at like the likes of CrowdStrike. Obviously I owned it for a very brief period, and then I got out break even, and I thought this could get a lot worse for this company at this sort of valuation, and that's what happened. The stock has fallen massively, and I'm just looking at these sort of stocks now, and I'm kind of making a bit of a spreadsheet, and I'm kind of looking and thinking, well, what price would I buy it? And I've wrote my price down on what I'd buy CrowdStrike, and now I'm just kind of looking at the stock every kind of so often, saying how close is it to the price target where I'd buy CrowdStrike, because I think at some point, something like a CrowdStrike does come and buy on this sort of dip. And it's easy when you've got all these stocks crashing that you don't actually know what to buy. So I've got personally, for me, I've got a watch list. I've got all my prices that I'd buy all the stocks at, and then when I buy them, I just move the price target down a little bit to where I would buy my next sort of position, and then I'll see if it goes down there and hits the price target. And I've got that for all the stocks that I currently own, and then I've also got a list of stocks that I want to own, and the price target I'd buy them. So something like a CrowdStrike, for example, is one that's interesting. I don't want to buy it just yet, but if we see CrowdStrike maybe take another 20% tumble on the share price, you never know. And that's the list of what I'm looking at the moment. So yeah, hope you enjoyed the video. Lot talking about the crash that's going on at the moment, what's causing the crash. Could the crash slightly get a little bit worse? Maybe, we never know. But long term, that's what I'm focused on, and long term I think we'll be all right. Is there opportunities? I think there's opportunities. I'm buying. So I hope you enjoyed the quick recap, guys. Hopefully I'll do a hims and hers video tomorrow, and I'll try to get a UK stocks I'm buying video out for you guys, and then we'll see what happens, because I'm actually away on holiday for a week in Italy, so I don't know how I'm going to do on recording times. We'll see what happens anyway. So just bear that in mind, guys. I won't be active in the next kind of couple of days, but I'll see what I can do. Hope you enjoyed the video, guys. See you in a bit.